Let's bring in George Ball, CEO of Sanders Morris Harris. George, always good to see you. Got to ask right off the top here, what's going on with big tech? There seems to be nothing that can stop it. Are you concerned at all that we've gotten ahead of ourselves here?
Yes. There's been a great deal of talk about FAANG bubbles. And usually since the moment the market climbs a wall of worry and all that sort of nice thing, bubbles exist just like bubbles in the air for much longer than people would expect. But if you look at the fundamentals, some of the big tech companies, they're great companies. They're earning a lot of money. They got a huge amount of cash, are coming under governmental attack. You're seeing senior leaders leave to start their own companies. They're becoming much more bureaucratic now. And usually that's the sign of the beginning of the fissures that crack a bubble, if that's not a mixed metaphor. And I do think that the FAANG stocks in particular have a good deal of downside risk now. The reason that they continue to be so strong is that they are the one group that algorithmic traders can follow right now with a fair degree of confidence. And I think that's giving them their continued strength. But that's going to end at some fairly near point.
George, let's say clients call you this week and they, after reading what Joe Biden puts out regarding his potential plan to reboot the economy, and they say, hey, George, my taxes are going up. What's your response to them? And what should they do with their portfolio?
Well, there is a problem because Biden is probably more of a middle of a rotor than many of the Democrats, but all of life is after tax. That's unfortunate, but really at the end of the day, what you can put in your pocket is after tax. And if you combine corporate taxes, capital gains taxes, individual income tax rates, probably you're going to put 25 cents less in your pocket under a Biden plan than you would under the current laws and the current administration. Now, that's a negative. You'd like to put more in your pocket, and that means that the present value of the after-tax stream of dividends, which is sort of the capital markets theory, means that stocks, all things being equal, would be lower by 25% than they are today. May not work that way, but that at least is the theory.
All right, George Ball, we're going to have to leave it there, CEO of SMH Group. Thanks so much. Always a pleasure to see you.
Yeah, thanks, Alexis.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.